welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 249. NASDAQ is off 78. S&Ps are off 29. Gold contract up $4.80, trading at $1,216 an ounce. Silver up 16 cents at $17.22 an ounce. Platinum down $16 at $1,283 an ounce. Copper up 3 pennies at $3.02 a pound. Light sweet crude off 50 cents, trading at $90.95 a barrel. Bonds. The ever-ready bond market, folks, is amazing. 10-year up 27 ticks at 125.15. Huge conviction. 30-year up 122 at 139.19. Also huge conviction. Wide price spread, accelerated volume, all of the above. Bond market, folks, has action to the upside in a dramatic way. No two ways about it. King dollar. Let's go take a look at King dollar out here. We have a King dollar as this. King dollar is trading at 86.08. And if we go take a look at King dollar, what you have, number one, she's extended up here, and we'll see whether she's going to take a little break. What King dollar has done, huge run. The run that we're talking about started 3 months ago. That run was down at the price point of 79. We're at 86.08 right now. Big numbers. No two ways about that. You have the euro down 24 at 126. The pound is off 38 at 161, and the yen is down 44 at 109.20. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? You get some price destruction? No doubt. This is what we're talking about here. Cash S&P down 24 bucks. We are at 1947 right now. This is making its way down to this price. The last swing low out here was 1904. Get this for a second, get this out of the way for you. Sorry about that. We will get these charts correct for you right now. There we go. There's one. There's two. And bingo. There we go. Okay, so cash S&P right now is trading at 1947. And if we go over the SPY and want to take a look at the correlation inside the SPY, monster volume on the way down. Right now we're at 128 million. We are back, number one, where we were on June 6th. Pretty amazing. The swing low. Okay, so these are the swing lows we're going after, folks, okay? The first one you're going after is the swing low that was established on August 7th, rather. August 7th is 190.55. You're coming into that baby, and you're coming into it with some heavy juice. And, of course, it's only Wednesday, so I expect you're going to see some more destruction. The NASDAQ, the composite is the weakest indice out here today, down 82 bucks. We are in the lower range in the composite. The composite, all the composite had to do is get back inside 44.85. You're in it. You're in it with a vengeance, by the way. She's going to come back down to this 43.25 area. You do have the expansion of volume. We look at the NDX 100. So inside the NDX 100, that is also coming down with juice. 44 million shares thus far. NDX, which is pretty amazing. You know, we went sideways for almost 2 months. NDX right now is trading out where it was trading on the 23rd of July. Small caps. Now, small caps, folks, have been the weakest indice, fallen out of bed once again. And the small caps, folks, are ready to take down the February swing low, which is going after. Right now, the May swing low, which is 107.44, we are going after it as I'm speaking right now, and it's going after it with a vengeance. I mean a vengeance. And the small caps, man, Mike from Thailand, this is pretty cool, you know, and some of the Tigers in the Den picked this up coming into the close yesterday. Into the close yesterday, folks, someone was unloading huge amounts of IWM. But what they were also doing, and it was really subtle, they unloaded a huge amount of volume in the marketplace, period. The volume exploded in the last 10 minutes, and they got out, and they got out. They were smart. How they, well, when I say smart, not as you can't tell who or what they are, but as what they threw at the marketplace, it was very subtle. It didn't get reported to actually after the closes out here. If we do look at the IWM, and I put this on a weekly or a monthly basis, what you're going to see is this. You're going to remember something, that the February 25th, the February 5th, the week of February 5th, that is the swing low benchmark for all the indices. Well, when we take a look at the IWM, that swing low is 107.27. The way that the IWM is trading right now, it wants to blow that away. You blow that away, and let me tell you something, get out of the way. Because what you have with the IWM, the next move down to the IWM would be 91, and you're at 107 right now. You know, so it's a big number. That's the real bottom line. Gold contract. Let's go take a look at gold. What we have with gold is this. Gold tested its low of Thursday, yesterday, and did it with lighter volume, but still quite a bit of volume. Today, we have volume contracted by 25%. Rejected lower price. It needs a sign of strength. No two ways about that. It needs a sign of strength, but the bottom line, it did reject lower price. Silver, different ball game. Now, silver is going to need huge amount of strength to break back inside where it broke down from. Silver's got a long, excuse me, folks, got a long way to go. What silver does have, though, is high volatility. You know, silver came down hard from this 1850 area. It's 1717. Silver has a lot more work to do than gold. Bonds. We talked about bonds. These bonds are a trip. Okay, so bonds. The 10-year has done 1.7 million contracts out here today. Huge. Wide price spread, accelerated volume. You swing high, it's going after is the 126. I suspect we're going to go a lot further than that. The 30-year, this is the second time in the last week and a half that that you're up over a point. We're almost, well, we're up a point and a half. And that takes a lot of buying, folks, to be up a point and a half. You're up with 467,000 contracts. If we put this on a continuous future contract, what we have inside the 30-year right now is we are making the run for, we're at 139, you're making the run for 149. And we'll see how it basically operates when it gets up to those levels. Big numbers out here. So, inside the Dow Industrials, you want to see something that's pretty wild? It's not the Dow, it's the NASDAQ, actually. But I'm going to show you. So, inside the Dow, out of 30 stocks, you have one that is up. That's Coca-Cola. A few minutes ago, there was nothing up. Coca-Cola's up 7 cents. This one, though, is insane. Inside the Index 100, folks, okay, you have 2 stocks that are up out of 100. Autodesk is up 58 cents, and Alexa Pharmaceutical is up 33 cents. That's it. Every other stock is down. Vertex Pharmaceutical is down 6.85. Vipul is off 30 cents. You got Seagate Technologies down 2.30. NXPI is off 2.55. Well, in the great world of Apple, okay, Apple, once again, it's going south. Not a huge amount of volume yet. Apple only has 40 million shares. Apple, on a weekly basis, we know what the number is. The number is 100.72. It has managed to stay over that number 6 weeks in a row. That number is crucial. Why, folks? Because that is the high swing going all the way back to the first high in Apple, which was established in the September of 2012. You close under that number, and guess what? It's not curtains, but it might as well be curtains. You know, the last time that Apple went down like 45% nonstop. I mean, it's pretty amazing, actually, when you think about it. And so what we do have here with Apple is that we'll see whether it closes under that 100.72 area. Dow stocks, big numbers. 3M is down 265. You had Johnson & Johnson off 245. United Technologies off 175. You get selling, folks, all sectors right across the board. Dow Industrials right now down 244. Nasdaq is off 79. S&Ps are off off 28. You stay right there, folks. Come right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials right now off 249, Nasdaq off 80, S&Ps are off 29. And as we do each and every Wednesday, folks, at 20 past the first hour, we have our man, Mr. Daryl Martin. Don't forget, every trading day, folks, we have live content here from 8 in the morning to 6 in the afternoon. You get all that content right on your cell phone, TFNN.mobi. We actually stream 24 hours a day. Daryl has an outstanding show every trading day, 1 to 2 Eastern Standard Time. He specializes in the Nadex platform. And, of course, this week we're having our $10,000 Nadex trading contest and our giveaway. Daryl Martin, what's going on?
How you doing, man?
Doing great, man. We get volatility in spades, baby.
Oh, it is just coming one day after another after another.
It's pretty amazing, isn't it?
I'm loving it. I mean, you get $3 moves in oil back to back, like $3.
You know,
fantastic.
And folks, you know, and then inside the Nadex platform, of course, you know, you can trade the indices, you can trade the commodities, you can trade currencies. What does happen is that it seems that, as Darryl was just talking about the oil market, for the amount that you're putting up, you know, when you're trading a Nadex product, you're really trading an option, but just with a very small expiration, and it is a mind blower, man, that you can actually put on a position inside that oil market for basically short money. You know, and that's, you know, in this case, folks, the oil has gone down dramatically in 2 days, which is just pretty intense. Yesterday, you know, that was one of the largest moves I've ever seen in oil, actually, you know?
Oh, yeah, I mean, we were like a little bit above 94.50 there and dropped all the way down to 91, so it's massive.
Amazing.
Then it bounced like huge.
Right.
Early in the morning, you know, up to about 93.
Yeah, this morning, exactly.
Yeah, and then comes on back down to about $90, $90.50, right around there.
Yeah.
So, I mean, just some fantastic volatility. And, you know, some people, like, shy away from it. You know, obviously, like, you embrace it if you're a day trader. You love volatility.
You need it.
But you're scared of it, you know, sometimes, right? And so that's the beautiful thing about Nadex. You go there with that capped risk, and you just grab it and take advantage of it.
Yeah, a whole different ball game, folks, with capped risk. And what we, you know, the dollar move has been extraordinary. And what we may get here, folks, both ways, which is going to be really cool, and in fact, it's moving right now, is you may just get the opposite, meaning now you're going to get the counter trend bounces, because the expansion in the dollar has been dramatic. There's no doubt, and just a normal
flying up,
isn't it? I mean, no, man. You know,
you talk about King Dollar up, market down, man. Talking about it right there.
Well, you know what's wild is that okay. So what Darryl just brought up, that's the hardest thing to figure out right now. Okay, because you know, because the dollar has gone up extraordinarily, right, folks, and it hasn't affected the market. And you know, of course, you know, the market got hit a couple of days ago. Well, let's say for the last week it's been huge volatility, okay? Up 300, down 300, up 300. Now, you know, just I'm looking at this, I'm saying, so I know the dollar's extended, you know, it's like, okay, ready for a pullback. But it's almost like I'm trying to get a direct correlation, and you really can't get a direct correlation right now about the dollar move versus the market move, you know?
Well, there's so many things going on right now. You got all the international countries trying to really pump up exports.
Yes.
You know, which is like they're trying to, basically deflate the dollar, which has increased its value, and inflate their own currencies. You have the gold sell-offs happening with the banks. You know, we talked about that last Friday, and of how that, you know, the agreement to sell gold expired.
Right.
Or not sell gold, rather, expired.
Right.
So there's so many, like, dollar-moving things happening that aren't just Fed policy that are happening right now.
Oh, for sure.
Which I love. Sure. That's what you get that government piece out of the way, to just let, like, the markets become the markets, and that's where it gets fun.
That's where it moves. And when Darryl said that's where it gets fun, folks, okay? But, you know, seriously, what happens is this, folks, is that if you trade equities, or you trade futures, or you trade the currencies, come over and test drive the Nadex platform, because what the difference is that it is capped risk at all times. And that's a whole different ball game, and particularly it's a different ball game when you have these large type of moves, because what happens with these large type of moves is that you have the aspect that your risk is very small. Well, you can make it small. Let's put it that way. It's up to you what you want on the risk, but you can make it small. The reward, most of the times, folks, you're not going to get the full exposure to where the contracts can go. Now, in this case, today, you are going to get the full exposure. And that's where it really gets intense, because, you know, when you get the full exposure, it's like, you got to be kidding me, man. I mean, you know, it's pretty intense. You know, when we take...
I mean, you get the full benefit.
Yes. Yeah, thank you. Yeah, exactly.
And you can go in there. I mean, and the thing is, people don't get it because they hear futures and they think $100,000 contracts and everything else. And,
right.
I mean, you can go in here with, you know, $30 risk.
Yep.
You know, or you can go with $3,000 risk.
Right.
Know, whatever you want to do. But I mean, you could have went in this morning. Here's a great example. Okay, you could have went in this morning and you could have went short on oil.
Yes.
and then it could have flown. You got a 230 contract. It could have flown $1 against you, solid, a little bit more than $1. You'd be at max loss.
Right.
Having fun. But it comes back down, and you could still be profitable.
I know, man.
There's nowhere else you can do that on an intraday basis. And, there's option contracts, but they're weeklies, they're monthlies.
That's right. That's right.
And so you can go in here, you can take a directional stand, but not have to, because we always add on that risk or we move our stops because we want to be right, especially us guys,
Sure.
And with this, you can actually, your ego can sort of get in check by having that capped risk. Thing flies against you $1, comes back down $2 or $3, you're still profitable on the trade. And I mean, that's what it's about right there, is having that ability to be wrong, but having time to be right.
No doubt. And, as we go over to our leaderboard, folks, and don't forget, folks, if you are in the Nadex trading contest, well, just make sure you trade every day, because each and every day we're giving away $500, five $100 separate prizes, plus the out of time in the trade, just for trading. Right now, the leaderboard, it goes from a profit of $18,000. That's first place down to number 10 is $11,000. So we'll see this change every day.
Yeah, I'm looking forward to it, especially after today. I want to see what happens.
Yeah,
with all these massive moves.
There's no doubt. and what you can expect now, this will go right till Friday night, folks. It closes out Friday night. We'll have the winner for you on Monday morning. But what we will have, because of the volatility in the markets and in the currencies and in the oil and the commodities, you're going to see some very large fluctuations.
Yeah, I'm looking forward to it. And it's fun, too, because I'm getting to where I know a lot of these traders now.
Oh, isn't that cool?
I know Dr. Fada there, and I know Burgess, and so it's it's fun to watch them and see them coming up and doing well.
Yeah, there's no doubt, man. And and just to clarify it too, what ends up happening, we had a target yesterday. You only can do 10 contracts, folks, but that's 10 contracts at a time. So.
You can go 10, 10, 10,
exactly.
10, 10. You could put in 100 contracts. You just got to do 10, 4.
Right. So bottom line is that, and markets out here, folks, what we are going to have, I don't think we're going to have more volume than yesterday, because as I was just saying a little bit ago, Daryl, they threw so much volume into this market at the last 10 minutes of yesterday. It was amazing. I mean, the NYSE, folks, ended up doing $943 million. Without an option expiration, and the NASDAQ did $2.1 billion. Now the NASDAQ, this is what's going to get cool. The NASDAQ is going to do more than yesterday. So you can see on the NASDAQ, the doors are not big enough, folks, to get out of the NASDAQ, to get out of the markets, period.
Right.
But when we're talking the NASDAQ, you're talking some big numbers. Listen, folks, don't forget, you can listen to Daryl every trading day. And, of course, with this contest going on, don't miss that program, 1 o'clock. Daryl, you have a great night, safe night. We look forward to the show tomorrow.
All right, look forward to it.
Okay, man, have a great one. Have a safe one. Dow Industrials right now down 231. NASDAQ off 74. S&Ps are off 26. You stay right there, folks. We'll come right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. You get the Dow Industrials right now down 230. NASDAQ is off 72. You get the S&Ps off 26. We take a look at some of the high volume stocks out here. What you have Bank of America is down 29 cents. Fannie Mae, Freddie Mac, they're getting smoked. That's Fannie Mae right now is Freddie Mac is down 99 cents, $1.70. What that's all about is that there's been a case going through the courts, and bottom line is that what the case going through the courts is, well, hey, first off, just to get you some clarification, Fannie Mae and Freddie Mac, bottom line, when the law changed, the government took it over. End of story, actually. However, the stocks still trade, which I don't quite understand why they even allowed the stocks to still trade, because the aspect of the takeover kind of goes like this, that the government owns 84.66% of Fannie Mae, Freddie Mac. They make them send all the profits back to the government, and the government has said right from the get-go that, you know, no one else is going to get anything, period, okay? A couple of the hedge funds have come in the market and decide they're going to fight that. And you're talking big money, too. Well, actually, not probably big money for hedge funds, because when this was happening, the stock was only trading at 20, 30 cents. Got all the way up, though. Got up pretty dramatically. When we take a look at, let me pull this back a bit. So when we take a look at it, yeah, it went down to 65 cents. It's got as high as $5.40. Yeah, 6.35. Got as high as 6.35 from an aspect of trading at 26 cents. Make a long story short, they lost the first case. This thing's not going to end for quite a while, but they lost the first case, and both equities are getting killed. We take a look at you have Rite Aid right now down 50 cents. You get GE off for 46 cents. Microsoft is down 40. You get Delta Airlines off 133. If we take a look at the airlines, the airlines, this is more than likely just about Ebola in Dallas. That's a problem, no doubt. They figured less people would fly. I suspect that, yeah, that would make sense. Sad but true. Bottom line is that this has been rolling over for quite a while. Like, you look at Delta, we're at $34.83. Delta wants to trade down to 24 bucks. If we go inside the oil and gas sector, which has been coming down dramatically, what you're going to see, and I've been talking about this February 5th benchmark for a long time. What that benchmark is, folks, is a high volume low that wants to get tested. It's in all the indices. The small caps are almost there. ExxonMobil, bottom line, looks like we're going to basically hit it probably tomorrow. So if we take a look at ExxonMobil, what you're going to see is this. The February 5th low, the swing point that we're talking about, there she is, yeah, is $89.27. The high of that low is $92.31. So I suspect that we're going to get at least the high of the low tomorrow. Thus far, the ExxonMobil has come down on 40 million shares, and let's say we got 3 days of trading. We had 2 days of trading left. The benchmark here is 80 million. So we'll see how she comes into that benchmark. What you want to get out of this more than anything, though, folks, is that the equities have been hitting them, the benchmark. A couple of the sectors, meaning the IWM, is going after the benchmark right now, and that puts the probability much higher that the S&P is also going to go after the benchmark. Now, this is the deal. If you're long this market, just get your stops in. You don't have to sell the market. You don't want to sell the market? Great, get your stops in. Because the S&P, folks, the benchmark on the S&P is dramatically lower. We're not, you're talking a very, a very large number here. When we bring the benchmark up on the SPX, you're talking 1737. So we're talking about 200 points from where we are right now. If you think this is a bad day, you're talking about 200 points. Now, that's the first part. Now, watch this. If you happen to be watching Tiger TV, what also has happened is this, and this is the heaviest part. I was doing this a few days ago, and it did it. So check this out. This is intense, folks. What we have just done today, and if you're familiar with the Art of Time in the Trade, your Ultra Trading Mastery System, my book, what you know is that when you break swings with conviction, the bottom of the whole area is where it wants to go. Now, in this case, we're at 1943. The benchmark that it wants to get down to is the 1797. We're just breaking the trend, just breaking it. Wide price spread, we have the accelerated volume, and I suspect what we're going to have out here tomorrow is that you could do the same. You start out slow and accelerate down, or you just jump the creek. Jumping the creek, more than likely, is what you're going to do. And what that means, folks, is that your trend line here of this break. Well, by the way, what that would generate, you break this, that generates a 1343 S&P. That's down 33% from where you are. That's 600 points, right? 600 points, yeah, that's big numbers. Bottom line, that's how it's set up right now. You know, you break that with wide price spread, accelerated volume, that's where it's going. You know, you have bounces along the way, but you got to remember something. Because we went up so dramatically, straight line, well, you can get down just as well as a straight line, because what you haven't done is that you haven't built foundations on the way up. And when you don't have foundations on the way up, it's a lot easier going straight down. That's just any market, any time. Apple, of course, is going to be one of the big ones. And Apple's still hanging out there. You know, Apple's only down $1.40. The NDX 100, however, is basically getting taken apart. And that, you know, that is getting taken apart, folks, in the aspect that the IBB still really hasn't broken down. The IBB is only down $4. Now, that's the NASDAQ Biotech Index. It's only down $4. So there's some damage. What you have in the NASDAQ 100 right now is this. It's the overall damage that is participating today inside the NDX 100. That's what it is. The amount of stocks that are down are dramatic. When I had brought this up earlier, about 1:30, 1 o'clock, I was looking at it in my office. The only stock that was up was Alexa Pharmaceutical, was up 2 pennies. Right now, we have 4 stocks out of 100 up. That's it. That's all she wrote. Yeah. So some of the, let's go take a look at PCLN price line, because these high flyers, folks, when they like to go south, they like to go south. So price line's down $20. That's not a huge amount. It's only down like 1.5%. Price line, but guess what? Oh, baby. Price line's an ABC down. Oh, it's a big one. Check it out. You're breaking the swing with volume. So your swing point on price line is 1139. Volume is 829, and you're already down 849. Your A point on this, man, this is big. Your A point is 1329. Your B is 11. Oh, it's $200. Yeah, your B is 1139. So 200 off. So 1205. 1,005. That's your first target. Let me bring this back and put this on a weekly. So 1,005. Where's the 1,005? There you go. So 1,005 is the last time. This is really wild. So $994, folks, which was the high of August of 2013. That's where this thing wants to go. And what you do have, and this is pretty intense, if you want to see, that, you know, the size of these tops, folks, are amazing. So price line is trading where it traded in November of 2013. This high is dramatic, though. And what you're going to see, and, you know, this is not hindsight, is that as this head come off the top, guess what? You're pounding lower price with volume expanded. Then what ends up happening? You go up again with light volume. You come down again with volume. This is going to be going after that swing low of 1087, and we'll see whether it has the juice to break it. But right now, the way that it is set up, it looks like that is not only going to break it, it looks like it wants to take it apart. Some of the Dow stocks, a lot of them are getting smoked. The 3D area, we take a look at one of the targets. We want to look at the 3D systems. There's DDD. That's down 196 out here. And she is coming into the high volume swing low. Look at this. She's going to break it, too. She had a high volume swing low at 43.35. You've hit 43.91 thus far, and your volume has expanded. She's going to go after it. We'll see whether she's going to break it. Got to see what this GoPro is doing on a day like today. So GoPro is only down 160. You got to love it. Oh, man, wild. You stay right there, folks. Tom O'Brien's TFNN. Coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien. Welcome back, folks. Dow Industrials right now down 209. NASDAQ is off 65. S&Ps are off 61. We take a look at some of the percentages out here. What you have is that you have the NASDAQ is off 1.4%. S&P is 1.3 rather. Dow is down a 1.2. That's a lot more destruction than we had in Europe. Europe, you had the FTSE down 0.9. CAT was off 1.1. DAX was down 0.9. Last night in Asia, the Hang Seng continued lower. That was down 1.2. And if we start and we go look over to that Hang Seng for a second, what you're going to see is that right now we're at 22,932, and that's making its way down to that swing low out there of the 2160. What we just did have also is that the head of the Secret Service, she just resigned. Yeah, so Julia Pearson just resigned, and of course, I think it's good she resigned. I mean, it's pretty amazing that the aspect of the White House deal was one deal, meaning that someone basically jumped through the fence and got into the White House itself. The second one that, if you heard last night, is that inside an elevator when the president was at the CDC, one of the security people basically had a gun on them. It's just, what's so bizarre about it is that there was a great article this morning in the New York Times, and what the article was is that no matter what city all of you folks live in, or we live in, right, you can always tell when the president is in the city because you can't even walk down the street. It's like, okay, what is this all about? This thing is so whacked out, it's unbelievable, okay? Because we know, I'm sure most of us have been in, somewhere where maybe the president, where the president was, and the streets are closed, and you can't walk anywhere, and you can't do anything, right? And yet someone can walk right now. It's a mind blow. But anyway, you know what that shows you, folks? And I was talking to my son about this a couple weeks ago. It really shows you how fragile all our institutions actually are. Because the reason this came up was it came up when the amount of credit cards that are getting stolen. I was talking to him, I says, it's amazing. We think everything is so solid, but things are basically fragile. They are less solid than I think that we. Well, let's put it this way. I don't know what you think, but my perception of what they were. And then when you hear things like this, it's like, oh, you got to be kidding me. And as the you could. Yeah, you can't. The head has to go. That's how that whole thing goes. I'm sure there's plenty of mistakes that were made, but the head has to go. That's just how it goes down. 877-927-6648. Inside that commodity market out here today, this is what you had. Coffee was up 0.3%. Cocoa was down. Crude oil was off slightly. If we do look at the crude oil market, folks, what you have is this. Crude oil right now, we're at $90. Excuse me, folks. It looks like it's an ABC structure on the way down to 85, which is going to save all you folks in the Northeast and the Midwest huge amounts of money. Across the whole country, now this is going to be really cool, folks. Across the whole country, we're going to see unleaded gasoline under $3 at the pump. Right now, unleaded gasoline wholesale is at $2.44. It not only broke down, folks, this thing broke down with monster volume. It's an ABC structure on the way down, and it's a beauty too. Your 8-point up here is at 284. Your B is 244, so you get 50, right? 40 cents. Your C point is 255, so that would bring wholesale to 215. If wholesale is 215, folks, what you're going to see is that we're going to see 275, 280 unleaded gasoline, which is just, there is no doubt what that will do is put good amounts of dollars in everyone's pocket on a continual basis. Because gasoline, there's so many people just going to work that how much it costs them just to get to work. So that's gonna be a good little pop that we do have coming at us. What we had out here today is the financials basically have gone south with volume. You know, on last week, on the 15th, on the 25th. Last week when we had come down 300 in the Dow, that was the first day that the financials cracked. You know, we had gone from 2242 to 2207. Today, they not only cracked, but what they did is they got into the lower range. So that puts the XLF right now that it wants to run down to 2208. That's a smaller picture. Larger picture is that you get the 2119 level, which was April 14th. We put this back, and we put this on a little bit. I'll put this on a 3-year. And on a 3-year, what you have, which is screaming here, it's the same deal. This these February benchmarks are all over the place. So no matter what you have, folks, you should go look to see what the week of February 5th. That is the first benchmark on the way down. And you can take a look at that, and you can decide, guess what? I don't want to take that type of heat. You can put a stop in if you're doing this on a long-term basis. Bottom line, do something to protect yourself, folks. You know, you don't have to, you know, bail if you don't want to bail. But what you certainly should do is put something in to protect yourself. Alibaba, bottom line, who knows how this happens, but this is going to be a total mind blower. I mean, I've seen big events come out and call markets before. Alibaba, you know, we were speculating that was the high. It has been the high. That's the first part. The second part, though, is more bizarre, because the second part, folks, is that if, in fact, this guy Jack Ma must be just, you know, the stars are just with him, okay? Because he went IPO the high in Hong Kong also, before all the markets crashed across the world. Isn't that amazing? That was the high of the market then. Ended up going higher. He ended up buying all the stock back at the IPO price. Comes over, you know, works long time, makes Alibaba, well, thousands of times bigger. Does the IPO again? Guess what? You know, but hey, you know what the good news is? The good news is that you're going to be able to buy Alibaba at a much lower price. And I suspect, you know, it's just like anything else. Nothing goes up forever, nothing goes down forever. You know, we'll see how we hit the first benchmark, that being that February 5th level. You know, you hit it with lighter volume, guess what? You're going to bounce. You hit it with heavier volume, guess what? Lower prices are coming at us. This is Tom O'Brien. This is TFNN. Dow right now is down 224. Nasdaq is off 68. S&Ps are off 68. Gold up 360. Bonds. The bonds are just on a tear. The 10 years almost up a full point right now. 10 years up 29.6, which is almost unheard of. The yield on them, 2.3. How's that? I'll be right back, folks. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Roald Dahl. Those who don't believe in magic will never find it. Magic, I'll tell you, man, magic is a beautiful thing. You know, folks, we're having a $10,000 cash giveaway trading contest this week. And each and every trading day, we give away 5 $100 cash prizes. Included inside that $500 cash prize is that you also get a copy of Art of Timing the Trade book. And that is just for trading. You know, when we take a look at the actual leaderboard out here, if you go to TFNN, you'll see the leaderboard. You can take a look at that leaderboard. You'll see each and every trading day. You can expect it to change. Right now out here, what we have is that, let's see, the top place winner right now has 18,600. Number 10 is 11,900. So bottom line is that you get some action. Don't forget, you can continue to trade every day out here. And right now, we got one of our winners from our drawings. We got Carlos Bagna. Carlos is from, well, he's living in California. I believe he's from Argentina. Carlos, congratulations.
Thank you, Tom. Thank you very much.
So, hey, so how, you know, is this the first time you traded the Nadex product?
No, actually, I've been practicing for probably 2 years. I started with Air Martin 2-3 years ago.
Okay.
I haven't done anything serious yet, but I've been practicing a lot. So.
That's awesome. And now you get a nice volatile market too, don't you?
Yeah, exactly. I'm excited with your book too.
We will get that out to you pronto. Well, listen, we are really. How long have you been listening to TFNN?
Probably for over a year.
That's awesome, man. Well, listen, we appreciate you growling and prowling with us out here. And we will get that $100 cash prize out in the book out to you ASAP, okay?
Okay, thank you very much.
Thank you, man. Have a great one. Have a safe one.
Thank you. You too.
Great. Market-wise, let's take a look at it out here, folks. We had the Dow Industrials down 238. NASDAQ off 71. S&P's off 24. Gold contract up $3.10, trading at $1,214 an ounce. Silver up 11 cents at $17.17. Platinum down 17 at $1,283 an ounce. Copper's flat at $3.02 a pound. Light sweet crude off half a buck at $90.76. Now, light sweet crude, folks, on its way to 85 bucks. Gasoline, guess what? The whole country, we're going to save a fortune, folks. I suspect what you're going to see with gasoline is that we are actually going to see unleaded across the country under $3. The wholesale market wants to run down. It looks to me it's a nice ABC structure on the way down. It dropped out of bed yesterday, had some follow through out here today with juice, by the way. And right now you get the wholesale gasoline at $2.44. So that's a good number. For all the folks also up in the Northeast and out in the Midwest, the heating oil's only at $2.66. This little baby's going south also. In fact, let's bring up heating oil for you right now, because that, no doubt, ends up being a big bill with, let's see. So we bring heating oil up right now. You're at $2.66 wholesale. Oh, yeah, this is toast, too. It's a beautiful thing. You're going to be saving a lot of money, folks. We don't have heat in Florida, but you're going to be saving a lot of money up there. So your A point on this is $2.89. Your B is $2.60. Okay, so it's 30 cents. That gives you $2.32. $2.42. $2.42. Not bad. Good number. Bond market, folks. Bonds are amazing. So check this out. The 10-year yield right now is 2.389. This move today in the 10-year was extraordinary, folks. The 10-year almost moved a full point, which that doesn't happen, folks. Actually, it is a full point right now. It's one tick off a full point. It's 31 ticks, and we've done 1.8 million contracts. This 10 years going to the moon. Now, what does that do, folks? Okay, so at this price point, you're talking 30-year mortgages should be quoted out at about 3.8 to 3.9. That's what you'd be able to get a 30. So don't hesitate if you're thinking of refinancing or going out there and getting some long-term money. I do think, I'll tell you this, but you know, you're at such low levels anyway. Those are going to go down. 6 months from now, you're going to be able to get a 30-year probably at about 3.5 or 3.6, which I know is a total mind blower. But that's the way it's setting up. 30-year bonds. What do we have with the 30-year bond? 30-year bond out here was up almost 2 points. You talk about wide price spreads, accelerated volume. We've done 493,000 contracts. Monster move. The 30-year right now is on its way to 149. So these are extraordinary moves. If we look at the whole world, what you're going to see is that this wasn't a phenomenon that was just happening here, folks. This was happening right across the world today. Rates, yields going down dramatically, prices going up. And if you still want to see what the competition is, because that's how you have to look at this. You have to look at, number one, where is large money going? And number two, what currency are they going into? So when I'm looking at this 10-year right now, we're paying 2.389 on a 10-year. If you go to France, you're getting 1.2. Well, when you do that math, folks, we're paying 100% more than France is. Germany is paying 0.9%, 900. Spain is paying 2.063. Italy's 2.2. See, it makes absolute zero sense that those countries are paying less than we are. But guess what? It's the market. And what the market is saying is that those are the rates because of why? Because of supply and demand. And what that means is that there's just so much cash around that they're looking for a place to put the cash. You know, what we did have last week is that you had rates go negative in the U.S. And what does that mean? Well, what that means, folks, is that means in the money market funds, that bottom line is if you're putting money into those funds, the fund companies themselves would get charged to hold the money there. You know, it was a bottom line went negative, and I suspect we're going to see more of that, and it's amazing. Now let's go over to King Dollar. What do we have with King Dollar? King Dollar has been on a tear. I expect is going to be on a tear. Is on a tear right now. Yesterday we did 66,000 contracts, I believe. Let's see. So King Dollar right off the bat, huge expansion on the way up, but King Dollar wants to pull back to 84.86. That's the first take, right? Yesterday, you got to 86.33. You did 34,000 contracts. Today, we did 38. King Dollar's ready for a pullback. That's in the short term. The longer term, folks, is that King Dollar wants to basically wants to get up this 89 level. The way, if we put King Dollar on a continuous contract, this thing is strong like bull, you know, in a huge way, not in a small way. We put this on a 10-year monthly. What you're going to see is that thus far, you know, this 89, 71 is game. Realistically, the 92 is game. Yeah, 92 going all the way back from 2005 is game. You know, and once you get beyond that, then what you have, you break that level. So, see, let's talk about this for a second, because King Dollar has been in a consolidation since its lows of 2008. That's a long time, okay? And inside this consolidation, what you have had is that you've run to highs on light volume and rejected lows on lighter volume. So that's a market that wants to go higher. And it totally makes sense, by the way, because King Dollar had topped out in 2001. It goes down from 2001 to 2008. Now what it's done is build cause. Now, you break this 89 to 92 area, you break that with conviction, oh, baby, then you're talking $1.21 again. And the way that the euro is set up, and I suspect, by the way, folks, that will take, you know, you're talking, to get to 89, I expect we're going to be another 3 or 4 months, even though we're this close. To break that level, I expect a year or something. Nothing overnight. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. We did have an expansion of volume as we went south, an expansion of volume in a big way. We're going to be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You have the Dow Industrials finished down 238. NASDAQ off 71. S&P's off 24. And market-wise out here, so what we did volume-wise is this. Yesterday, you had some real juice come into the market at the close. We did 943 million on the NYSE. Today, it did 865. So you can see you had follow-through on the downside. NASDAQ Composite, big money on the NASDAQ Composite. You did 2.1 yesterday. You did 2.2 today. Now, what that's going to set up, folks, is this. You're only into Tuesday thus far. What it's going to set up is it's going to set up a high volume week on the way down, going into the swing points that were generated out here from August. So if we take a look at this, we'll do this with the SPY first. You take the SPY, we take a look at the SPY. The SPY today did 175 million shares. I mean, it's a monster, folks. You made highs out here with 94 million and 151. The bottom line, you can see the correlation. The high volume low that it's going after is that August, the July low when we came down. It was 183 million. Then it was 189 million. Now, what you do, we'll put this on a weekly so you can see the correlation and say, okay, how are we coming into the weeklies? Well, your benchmark is 592 million. Thus far, we've done, oh man, forget it. This is going to get toasted. We've done 401 million thus far. Okay, so what that's saying is that you're coming into the swing point with volume. And now what does that set up? Well, the next benchmark down there is the good old February 7th one. This is what's bizarre, too. You know, that February 7th week is a long way away where we are. But once you get a couple days like this going, guess what? It doesn't take long to get there. You know, we know that the elevator on the way up takes a long time. The elevator on the way down just does not have any stops. So we'll see how we hit that. Now, that's your S&P. We take a look at the NDX 100. We use the 3 Qs for the NDX 100. NDX 100 today, 55 million shares. That's an expansion of volume. Your August lows that it's going after is 94. You're at 97 right now. We put this on a weekly, and what you're going to have on the weekly is that the swing point is 191, and right now we're at 130. That's pretty intense. This is, you know what's interesting here, folks, is that this has been really subtle. And the reason I'm saying that is in the aspect of that expansion, it's Wednesday, so we're into 3 days. But it really didn't seem like the volume was that explosive. And this is why. Just let me walk you through this for a second. The reason is that you had 2 days that were up and down. And the volume itself, you know, basically was, one day was kind of even, the next day was up a little, yesterday was up a little. You had, in the Qs, you had 33 million the first day, 41 second today, 55. If we continue down, which I suspect we're going to tomorrow, you'll see that volume expand dramatically. Let's go look at the aspect of, is there any fear out there? And guess what? Not enough. Thus far, if we take a look at the trend first, we're running at 1.76. That's a good one. But, you know, but that indication there is that there's not a huge amount of fear just yet. If we look at the tick index, what we've had thus far is that you have a minus 1241. Now, the indications, this is how these indications work. Inside the trend first, we talk about the trend's got to get at about over 8 on a 5-day basis for basically the first bottoms to come in. And you can see right now you're not even near that. Once that happens, though, then what you need, or simultaneously when that's happening, what you need is that you need at least a minus 1450 on the tick. What the tick specifically is, the tick is the amount of selling that's getting done inside the NYSE simultaneously from up bids to down bids. So when you have a minus 1450, that means when you take all the equities that are inside the NYSE, they're getting sold, and you minus the pluses, you know, ones that are being bought on an uptick versus being sold on a downtick, meaning the execution price, a minus 1450, once you take those, that is saying that everything's getting sold, and that has to be done within a minute. You know, that's how that tick works. The trend has to do with what everyone is selling. And when the trend turns and gets over 8.5, 9.5, 10, and you get a trend of 2, 2.5, 3 in one day, what is happening then is that everyone is selling the same stock. That's what's really cool to understand how this works. Because what you have, folks, is this. When we were going up, there were many equities that have been down and been down for a long time. Meaning they topped out, like Amazon. You know, Amazon topped out almost last July somewhere, you know. And there's many stocks that did that. But what you do have inside the indices is that you have heavily weighted stocks that have held up the market. What the trend indicates is that when that gets up to a 2.5 or a 3, that's when all those stocks are getting sold. And guess what you have there, though? That's the only stocks that are left getting sold. So the piling is going in and going out very, very quickly. So we have a long way before that is happening, but this is a great time to basically walk you through how that whole trend tick works in the correlation of where the market's going and what you can expect at some of these bottoms. The small caps out here, basically took it south in a huge way, monster way. IWM down $1.55. It closed out at 107.80. The swing point had 75 million. Today we did 85 million. The confirmations are everywhere, by the way, folks. This is going to basically blow away this bottom. Take it out with a vengeance, and I suspect what you're going to actually have is going to jump the creek. Jumping the creek is that when you come down, you stop right before some support, wakes up in the morning, has plenty of energy, and says, you know what, I'm not going to go fight this line that's here. I'm going to be a creek jumper. I'm going to jump right over it. And when they jump over it, now this can happen on the upside too. Meaning if you're at the top of a trend, you get a bullish deal. They jump and say, okay, I want to move. When you jump down, and you're going to get wide price spread, accelerated volume once again. What we have here in the small caps is that the small caps have been getting destroyed for quite a while. The small caps are trading back at where they were about a year ago, October. Huge volume inside the small caps, and those things are the first ones to go south. What we haven't had yet, and this is what, no doubt, which is amazing, is that you haven't had the aspect of the iShare biotechs go south yet. Once that happens, see you later, because the NASDAQ itself got basically taken apart out here today. And Apple didn't fall apart, and the biotechs didn't fall apart. Those babies fall apart, and oh, man, get out of the way. This is Tom O'Brien. This is TFNN. Dow Industrials down 238. NASDAQ off 71. S&P's off 24. Gold trading at 12.14. Silver's at 17.18. And this here is the 10 years up a full point now, 125.21. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow finished down 238, NASDAQ off 71, S&P's off 23. Some of the large caps out here, you had Boeing off 271. Exxon was down 119. You had the Big Blue down 266. Johnson & Johnson 229. 3M 250. You got a lot of big numbers out here. Let's go to bingo. Sorry about this. Where are we? Let's go to Danny in Atlanta. Hey, Danny, what's going on?
Hey, Tom. Perfect weather here today.
Oh, that's a beautiful thing. I think that weather's coming to Florida, man. I think we're supposed to get a cold front coming in. Like we'll get 75 this coming Sunday, which would be great.
Great.
Yeah, can't wait.
Tomorrow morning we get the natural gas report, and we usually get a dip going into that report. Do you see a buy point?
Let's take a look at it. I would wait on natural gas coming down to these lows because, let's walk through it. So natural gas, folks, in the futures market, they were talking about $4, 4.02. This has been in a consolidation. If we put this up, and you can see the consolidation that we've been in is from July. It couldn't handle a high today. Okay, so the high thus far has been 4.163. We went to 4.184 today, gave it up. So if you're going to do that, you'd have to do it would be under 384. Because that's what we did have some juice there coming off the bottom. The top of that was 4.01. So if you're going to do it, that's where you want to do it, and you'd be trading a consolidation. You know, put a stop underneath that, and you'd be looking for the top of the consolidation. Because it looks like this consolidation, you know, it's a solid consolidation. Let's put it that way. You know, now what worries me a little in the context, I know natural gas is cheap beyond belief. But what you do have is that oil is going to go south. And so that correlation there, it's not that there's a correlation because we just have so much natural gas. You know, but I think you got to pay attention to that. Do you know what I'm saying?
Yeah, I know exactly what you're saying.
Yeah, because oil, you know, listen, we're going to save a fortune this winter. Oil wants to go to $85, and that's only, the 85 is at A to B equals C to D. You know, oil can get a lot more volatile than that. We know that. You know, it's amazing that oil can run like that, but that's what it likes to do. And that's the way that's set up. And the oil and natural gas sector itself, Danny, right, is toast. This is toast in a big way, not in a small way. But, you know, if you're trading the natural gas contract and you want to trade when the numbers come out, what I would do is, let me bring it back up, because I've traded this on the numbers before. So what happens, folks, is this, is that when these numbers come out in natural gas, it is like volatile beyond belief. And what you have to wrap your head around, which is kind of hard to wrap your head around in this contract, is that 1 point basically is a $10,000, folks, okay? So they don't move like that. But what does happen intraday when these numbers come out, they're highly volatile, right? So the way I would trade it, Danny, first off, is this, is that the buy would be at the bottom of the high volume bar of the 25th. So that buy would be 3.840, right? And this is what you'd love to see. And this happens a lot. Well, this part of it happens a lot, meaning that natural gas, more than likely, folks, will go both ways. Just like, you know, when the S&P goes both ways and the Fed announcements come out. Okay, so first what you could probably expect is that you're at 4.02 today. You can expect that, okay, you're going to get into the highs of that low bar, meaning the low you want to buy at 384. So I'm going to put this on an intraday for you for a second. So what ends up happening is that you get it, let's say you come down into that level, right? As you come down into that level, the first time you're going to come down with big volume. It'll pop back up again. Then you come down with lighter volume, right? And test that level. That's when you can basically step in. That's how I trade that thing. Don't trade it. Don't trade it in the aspect right away, just throwing the dice. You want to basically trade it in the aspect that, okay, it's done what it wants to do. It's coming back to testing it, because then what you can do is that you can get your buy set up. You can put your stop on the other side of it. And typically for a buy, what you'd love to see is this. You'd love to see first come down hard, right? Go up hard, then come back and test it with lighter volume. That's one way it can be done. The second way it can be done is that you go up really nice, right? Then you give it up. You go all the way back down. You do that with lighter volume. You go back up. You just have to wait for the second test with lighter volume, you know. And I know that sounds insane, folks, but that's what the natural gas contract does when these numbers come out. So good luck, man.
Wait for retracement on a 10-minute bar, right?
Yeah, yeah. That's a kicker. That's just, you gotta wait, man. You know, I'm sure you've seen these numbers come out before. And folks, you should see these things move, man. It is like insane. Cooking, brother.
Thanks, Tom.
Have a great one. Have a safe one. There's a question in the Tigers Den. What is the vehicle? I was specifically talking about the actual future contract on natural gas. But we can go over to the UNG, and we can do it on the UNG. So if you're dealing the equity part of it, this is how you can do it. The UNG is the U.S. Natural Gas Fund. That fund right now is trading at $21.51. And, you know, I suspect that fund's going to, you know, basically go test again 20.76. So on a intraday aspect, what you're going to be looking for is the same type of volatility, the same type of move. Meaning you wait for a test, you make sure it's on lighter volume, and what you want to see out of that also is that you want to see the aspect that in those 10-minute bars, you have gone higher with an expansion of volume. You know, so when I bring up the UNG and we look at that on a consolidation basis also, what you do have is that that's all it is. It's a consolidation. It's not really giving you a good indication either yet whether this wants to break topside or go downtown. What's unusual is that we did go higher on Monday. You're going into the swing point, and it has some volume, and it couldn't handle it. And the reason it couldn't handle it, the UNG on Monday, we did $10 million on the way up. It's because of that gap down with $12 million. That's where the supply line is here. On the way back down, the UNG, which is really cool here, folks, and this gives you a heads up on the natural gas contract. The UNG has all light volume at these lows. So that's saying that you have a consolidation in gas, but it's also saying that gas wants to go higher. So as Danny was saying, he wants to be buying the pullback. And the way this UNG is set up is that would confirm that that's how that is played out at this point. So we'll know. We're going to know soon enough. There's no doubt about that. If we go overseas, we take a look at the Nikkei. What you do have is that you have China is closed. There's Nikkei. China is closed. Nikkei came down 91 points last night. No big deal, really. We go to Europe, and what Europe is going to be have some heavy-duty deals tomorrow. Why? And it's going to start right with the FTSE, folks. The FTSE now is attacking the swing lows that's been the consolidation for, and that consolidation has been 6 months. And guess what? Huge expansion of volume. FTSE was down 62, 65 today, almost 1%. The swing low it's going after is the high volume swing low from the 14th, 65.07. That volume was 800 million right now, and today we did 882 million. So let me get the exact number. 860 million is the high volume swing low. Today what you did is that you did 862 million. So that is setting up right now. And see, this is how our markets can jump the creek, folks, meaning our futures. Because if the FTSE, let me put this on a weekly, if the FTSE is jumping the creek in the morning, this is going to be huge problems for everyone. Why? Because the FTSE has been in the same place since May of 2012. Yeah, that you heard, May of 2012. FTSE jumps the creek, the next place the FTSE is going to be is 6,000. So that's down $500, or almost 9% from where we are right now. That's going to be a heads up in an extraordinary way. We go to the DAX in Germany. We take a look at the DAX in Germany. What we have is this. DAX come down today, $92. We're at 93.82. And that looks like that's just going after all the swing lows. What the DAX does have is this. The DAX actually broke the February benchmark, and it has a high volume low at its August benchmark, which is just a mind blower. But that's where it is. The February 5th benchmark on the DAX, we're basically, we are already into it. We know we're 30 points away from it. It's 93.52. We're at 93.82. Yeah. So bottom line is that you can see that there's some heavy selling going on, not only just in our markets, but that's all across the world. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back. Dow Industrial's down to 238. NASDAQ off 71. S&P's off 63. S&P's off 24, rather. We'll be right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We go take a look at the diamonds, the DIA. You take a look at the ETF structure inside the for the Dow Industrials, and what you're going to see out here, same type of setup, folks, okay? What we have out here across all the sectors, all the markets at this particular point, is that you came off these highs, and you're coming off these highs with some real volume behind them. The diamonds today, we're down 239. You did 11 million shares, and that, bottom line, actually broke a swing and has volume. The swing we're talking about had 8 million shares. Your A point on this is 173.31. Your B is 169.09. So you're talking approximately $4. Your C is 171.10. So you're setting up a 170, a 166. And your swing point that it's going after is 163.37. So I expect that's where this baby you're going to get into. Now, what the Dow Industrials have also done, folks, is this. The Dow's already inside its lower range. You know, when we actually take a look at the Dow Industrials, excuse me, folks. When we take a look at the Dow Industrials, the Dow is trading where they were trading June 5th. What you're going to see, which is just amazing, is that I suspect it's going to be very quick, too. The expansion downtown inside the Dow is more than likely going to be very quick. And for well, they're all going to be quick, but the Dow Industrials itself, what you have is that you have large multi-caps, large caps inside of it. They have gone up dramatically. They've had light volume. So if we take a look at the much larger picture, we put the Dow Industrials up. I'm going to bring this back. We'll put it back 15 years. What you're going to see is that when we took out the highs of 2007, which is 14,106, we took them out with lighter volume. So that's your first logical step that you come down to. Now, that step itself, if you want to see just how dramatically we went up, that you can make the argument that that's just a normal bounce in the market that wants to take a break. Well, a 38% retracement, because we haven't even had a 10% retracement in something like 2 years. A normal retracement over the course of years, folks, is 38, 50% retracement in the markets. Just a 38% retracement can take you to 13,200. You know, I expect, you know, the first laying off date number here would be the 14,000. That's a big number, though. Why? Because we took that area out with no volume. So we'll see how we come down to it. If we put the diamonds back up, we take a look at the diamonds. I'll show you this correlation inside the diamonds. And we put the diamonds also on a 15-year basis. What you're going to see is this, is that your swing point up here on the diamonds was approximately 542 million. When we got over that level in February of 2013, you did it on 100 million, 164 million, 168 million. You know, there's been straight move, no doubt. The straight move that we're talking about went from December of 2012, actually November of 2012 to where we are right now. But each and every move higher had lighter and lighter volume. What I've learned over the course of the years in the marketplace, folks, is that the longer that you stay at highs at lighter volume, the heavier the downdraft comes. That's where it's set up. What we have had in this marketplace is that you've had the high volatility come in the marketplace. And when there's large turns in the market, folks, what you get is you get that 200 down day, 200 up day, 200 down day, 200 up day. And the deviance of the marketplace goes like this. When you get it the first time, people get nervous and then they get out. Then all of a sudden it goes up $200 again. It's like, oh my God, why did I get out? So they get back in. Then you get it down again. And they say, oh, some of them will stay. And then they stay, and then you go up 200 again. Say, oh, that's good. We're all set. Then you get it down again. What happens in that context is that it's just one day that, guess what? It doesn't come back and go back topside again. You get 200-day down. Then you get a 200-day down. Then what ends up happening, though, is you get a gap down, and you wake up in the morning, and the S&Ps are gapping down 25, 30 points. That's when it gets serious. You know, you get a gap in the S&Ps with that kind of velocity, it gets serious. The reason it gets serious at that particular point, and normally that's always late because the amount of money lost is huge, but what does happen at that particular point is when the calls go off the board into all these broker-dealers and people say, I want out and I want out right now, and what ends up happening is they have to start selling across portfolios. You know, so this being a Wednesday, in a week that is going to be a full trading week, I expect you're going to see some heavy selling over in Asia tonight. You'll see a follow-through in Europe, and I expect we're going to more than likely have a follow-through here. I expect what you'll probably see And see, you know what the deviance this morning was, too, by the way, folks. This morning, and it was setting up yesterday. Yesterday was setting up. It couldn't hold highs. Kept trying to crawl up there, pull back a little. Crawled up there, pull back a little. This morning, what you had, you know, the futures are up $3, $4, $5. No juice whatsoever, though. That is basically a huge sign each and every time they're trying to make it to higher highs, can't make it to higher highs, and then out of nowhere, you get these sells. Because that out of nowhere sell, folks, is certainly not you and me. If you take a look at the future markets up here, whoever the operator is, and there's definitely more than one, the velocity of the sells today inside the mini S&P were dramatic. You know, they were dramatic in a big way. You had the sell that come off at 1,300 hours yesterday, at 1,350, right off today at 9:50 today. There was no mercy. It just started. They took the E-minis. They took them from 1954 down to 1950 in a heartbeat with big volume. Then they took them to 47. You get a sideways move, and it just didn't stop. You know, at 320 out here, they put some juice into them in a big way. And I expect what you're going to see, you can tell by the way that the correlation comes with the S&P, the SPY, the DIA, the IWM, and the QQQ. They have all expanded with volume, and right now they're in the middle of nowhere. So the first swing point that you're dealing with are the swing points from August. Those swing points are 190.55. Because if you take a look at some of these large caps, what you're going to see, if we take a look at 3M, guess what? 3M is already there. 3M is at 139. The swing point's 138.35. The volume is 2.6. 3M did 2.9. 3M is going to basically go a lot lower. This is Tom O'Brien. This is TFNN. You stay right there, folks. Allie Ford's going to be coming up next with her great program. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Stay right there. Allie's coming right up.